Welcome to Daily Wisdom from the Flippening podcast. These episodes feature short, to-the-point clips from our full-length interviews. We talk to the men and women behind the trades, crypto exchanges, and regulations with the goal of helping you become a better, more informed investor.
Hi, I'm Michael Kaplan, editor of the Flippening podcast. Today's episode is from a 2017 conversation with Aaron Brown, crypto derivatives expert and former managing director at AQR Capital Management, one of the world's largest hedge funds. We discussed the differences between the CFTC, the SEC, and the rest of the government when it comes to regulating Bitcoin and other cryptocurrencies. For the full conversation, check out Flippening episode 3. And now, without further ado, our conversation with Aaron Brown, crypto derivatives expert. Enjoy.
What are the differing agendas of the EFTC and the SEC? Is this a step along the way? And what happens to these derivative markets when an ETF opens? Is there a potential that people just sort of flee them and kind of go towards SEC regulated products?
I'm talking in general here. So the FTC, think of them as like the boxing referee. They just want to make sure there's a fair fight. They're not interested in, protecting the fighters. They just want to make sure that things get fair. The SEC, think of them as they're the ones who want to make sure nobody gets hurt. And they don't really care, they're not so concerned about, is there going to be a fight at all, or is it going to be fun for the fans, anything like that. And there's a third regulator here, too, we should talk about, which is the Fed or the Department of Treasury, or you can think of it as the U.S. government. And I'm not really just talking about the U.S. here. I think in every country in the world, every developed country anyway, you have the same three sorts of consideration. So the CFTC says, can we treat Bitcoin as a commodity? Is it well-defined enough that people can make bets on it and we know how to settle them? And we're not going to get all kinds of, clearinghouse collapses and bankruptcies and lawsuits. Is it something people can bet on? We're talking about experienced people who can look out for themselves. We just want to make sure that the game is something that can be well-defined. I think that battle has been won. I think the CFTC has come out and said, okay, you can either, if you do what LedgerX did and you do 100% collateralization, or if you're a well-organized, exchange with policies and procedures and infrastructure we trust, you can treat Bitcoin just like a commodity, just like it's gold or oil or anything else. It's a real thing. If you wanted to set up a futures contract and monopoly money, they wouldn't let you do it. It's not a real thing. Anybody can create it. But as long as it's well-defined, the CFTC has pretty much said they have no problem with it. I think this is generally true of exchange regulators throughout the world. In terms of investor protection, the SEC kind of who can invest in it. The SEC isn't never going to stamp out Bitcoin or outlaw it, but it might say, look, you really can't use this in institutional portfolios. You can't have an ETF. If you put it in pension funds, you're going to have all kinds of, it's not illegal. We can't stop you from doing it, but you're going to run into all kinds of problems. Unless the SEC comes out and says, okay, here's what Bitcoin is. Here's how it's regulated. Here are the rules in terms of know your customer, in terms of market manipulation, what's insider trading with Bitcoin. Nobody knows. All of these things you have to define for institutions to be really comfortable holding it. And again, this is an international thing. If the SEC defined it, that would probably be taken as an international standard. But it's possible the SEC will decline, but, you'll be able to trade them freely in London or Tokyo or something like that if those regulators are more accommodating to it. And those regulators have basically so far said no. They have basically, no regulator has stepped forward and said, okay, we understand Bitcoin. It can be traded in a protected, regulated space where, individuals can buy it, and we can put it in pension funds and things like that. And that's not required. There's no law that says you can't do it without that approval, but institutions are not going to go forward without some more regulatory encouragement. And finally, the sort of central bank, the Fed, the government, the Department of Treasury, the Department of Justice, their concern would be that Bitcoin can undermine currency regulation, can help tax evasion, can help illegal transactions, and so forth. So far, basically governments seem to be saying it's okay. They have taken enforcement actions. They shut down Silk Road. They put the founder in prison for his life. They've taken enforcement action against individual uses of it. But countries like, Argentina, Venezuela, where a lot of the citizens are using it because their local currency is basically very unreliable, those countries have pretty much allowed it. And they seem to be taking the attitude that better to let people have this safety valve for it. So at the moment, it seems like that third leg of regulation says Bitcoin's okay. But in the long run, that's the most important one. In the long run, if countries really decide Bitcoin is illegal, Bitcoin is a way of evading taxes and currency controls and all the other things we want to impose, Then, Bitcoin definitely becomes a sort of an outlaw currency, and that makes it more valuable to some people. The more governments crack down on things, the more valuable it is to be able to evade those controls. But it also means probably 95% of people are not going to dare touch it because it could screw up the rest of their lives. You almost have to kind of decide, are you in the underground economy and you use Bitcoin, or are you in the above ground economy and you avoid Bitcoin?
Right. Are you a cypherpunk? Are you a crypto anarchist? That kind of thing.
Those are people who would do it for political reasons, perhaps, but there are also people who want to do it they don't want to pay taxes, or they, not for political reasons, because they don't want to pay them, or they want to do transactions that governments make illegal.
That's it for today. If you like what you heard and want to support the show, please consider leaving us a review on iTunes, Stitcher, or wherever you listen to podcasts. If you decide to leave us a review after subscribing, we'll send you a free Nomics t-shirt. Just hit us up on Twitter at username Nomics Finance after you've left the review, and we'll hook you up. You may also be interested in Nomics.com, our crypto market cap and pricing website. Check us out at Nomics.com, spelled Nomics. Now stick around for our legal disclaimer. All opinions expressed by podcast hosts or guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions. The producers, hosts, and guests of the show may maintain positions in the companies or assets discussed today.